Japanese yen sell-off extends further today after inflation data and Bank of Japan minutes, with US dollar, Japanese yen and euro yen taking out recent highs and respective psychological levels at 90 and 120. National CPI core dipped 0.2% year-on-year in December, down from November's 0.1% year-on-year. The reading stayed negative in 7 out of the past 8 months, with only a 0% reading back in October. The details were even more worrying as persistent deflation pressure was seen in almost every category, with the core measure, which excludes fresh food and energy, down 0.6% year-on-year. The data raised expectation the Bank of Japan needs to raise its easing effort, and a 2014 plan on open-ended asset purchase is simply not strong enough. It is expected political pressure on an aggressive Bank of Japan easing policy will certainly be increased in the months ahead. Meanwhile, the December Bank of Japan minutes showed that a few board members noted that it was necessary for the bank to demonstrate its aim to encourage a further decline in short-term interest rates, thereby narrowing or reversing interest rate differentials between Japan and other economies, with a view to exerting influence on foreign exchange rates. And, the members also expressed that purchases of treasury bills should be increased substantially, with one member noting that the central bank should also considering additional purchases of Japanese government bonds during the further half of 2013. There was also a member who proposed to lower the interest paid on excess reserves from 0.1% to 0% and cutting the fixed rate fund rate from 0.1% to 0.03%, but that was voted down by another 8 members. Technically, the sell-off in the Japanese yen is mainly centered on the dollar and the euro. Sterling yen is still limited well below the 144.8 resistance, and thus there might be more consolidative trading seen. The same situation was seen in the Australian dollar and Japanese yen, as it's staying well below the 95 psychological level in spite of today's rise. Elsewhere, the U.S. House of Representatives approved the bill to suspend the borrowing limit by a 285 to 144 vote, lifting the government's borrowing limit of $16.4 trillion until May 19. In Asia, investors were concerned about renewed nuclear tensions in North Korea. The country's National Defense Commission stated that a planned, high-level, atomic test and long-range rocket launches will target the U.S. In response, the White House said that North Korea's threat was needlessly provocative, and would only encourage further isolation and sanctions. Looking ahead, German IFO and UK Q4 GDP will be the major focus in European session. German IFO is expected to show some improvements in January. UK GDP is expected to show a 0.1% quarter-on-quarter contraction in Q4, compared to a 0.9% quarter-on-quarter rise. Euro-sterling remains very strong in the near term, and today's data might trigger a further rally to 0.85 and above. Canadian CPI will be the main focus in the U.S. session. Headline CPI is expected to rise back from 0.8% year-on-year to 1.2% year-on-year, while core CPI is expected